Hi and welcome back to World Class Edge. In this module, we are going to basically summarize and simplify the setups that we have seen in the previous module in a more even simpler way, a very objective way. And this way of summarizing it is what Tom and Patrick and all the traders of the floor refer to as technical derivation. And the technical derivation is nothing more than taking these setups that we've understood of opening in value, outside of the value, and so on and so forth, and simplify them on a candlestick level. Let me explain. Now let's summarize what we've understood. We've understood that money flows in ranges, okay? That we're not gonna read market structure as a series of highs and lows, but as highs and lows, and where is the volume flowing? So where are the ranges actually going? And volume is going high as price goes high, and the value areas are following the price. So when price does this, it tends to form these P shapes in an uptrend, and in the downtrends is creating these sorts of B shapes, okay? Now to even have a more accurate depiction of this on a candlestick level, we're going to start with how we can qualify these ranges. And if price, for example, is going up, and this is the latest close of a bullish candle, okay? This level where the candle stopped, this is the close of that candle, right? This is the level. And let's say the next candle is closing lower. This is not enough for us to consider this as a resistance level. We are going to have to wait another candle closing below this candle, below this candle's close. Now I'm drawing a bearish candle, but it could easily be also a bullish candle, okay, that closes around this area, but still below this line. Once we have 1 and 2 closes below this close, we will qualify this level as the top of our range. And let's say price continues falling a little bit lower and then start auctioning higher again. And then there is 2 candles that close above the latest lower close. So this is our lower close of the candle, and we count 1 close above. So this is our last close. We count 1 close above, another close above. That's when we draw this line over here to be the bottom of our range. So all of this area is going to be our P. Of course, the volume profile of this situation will start to look something like this. So we're all getting back to the exact same concepts, but we're simplifying them with candles. And the rule of thumb here is we're waiting for 2 lower close and 2 upper close. Once we have these, the first setup is the break-in. So when a candle closes outside of this area, and then the next candle closes back inside of this range, this is exactly like we saw with the value area high and value area low, when there's this failed auction where price goes outside and then jumps back into the range. This is a long setup. So we're going to buy here when the candle closes. The stop loss can be below, and the target is going to be on the other side of the range at first, and then if we're very ambitious, it could keep going higher. But the first target will be the other side of this range. We could also wait for a test of this level before buying to increase our risk to reward. As you can see, if we go to the other side, it's going to be at least 1 to 3 risk to reward. And if then price breaks out of this, so we have a candle closing above here, our next setup is a continuation setup. So a test on this area or a buy as soon as these candles close outside. And that's our second idea. We want to continue following this trend, protecting ourselves whether below the whole area or below the point of control of this area, if we want to be a little bit more aggressive with a higher, slightly higher risk to reward ratio. And this is our second setup. And these two setups, as you can see, are trend following, okay? So we're following the current trend, the current uptrend, and buying as soon as we see a failed auction that closes back inside, or as soon as we see price auctioning higher. Ideally, we would like this candle to have a lot of volume, and we would like to see at the bottom of this candle whether a phase of absorption or a phase of exhaustion. And we're going to see what that is exactly in the order flow module. And again, these are trend following setups. We're buying and we're buying. Reversal setups in this situation would be something like this, where the following candles breaks back inside, and this reveals to be a failed auction, where we try to auction higher but fail, we close back inside. So the next setup we will evaluate is selling to go to the other side of the range. And this is the first reversal setup. Another setup for reversal that is widely used, for example, by Patrick himself, is after we break out the first time, we wait for another breakout of this level and sell with a sell stop and target the beginning of this impulse, but only as soon as this breakout happens. And this is another reversal setup. So as soon as our range is confirmed, we have this failed auction setup. Then we have a continuation setup, a break back in type of setup, and then a breakout reversal setup to target the beginning of the impulse. Let's make a practical example of this. This is the price of the S&P 500, and we're in a clear uptrend, okay? And we're in the daily time frame currently, so we're just taking this as an example. And as you can see, we are auctioning higher, higher, higher. This is our latest upper close. We close one time below and then we close up, so this is not a qualified upper range. This one though is, as we can see. So after this higher close, we close this candle higher, close higher. This one closes below. And the second one closes below. And as I told you, we need at least two closes. So we have, after this higher close, we have this lower close and this lower close. And then also this other lower close. So we have actually a qualified upper part of this range. This is our latest lower close. So we're going to wait for two closes above this line. So we start counting 1, 2, and this is the lower bottom of the range. But this one has been broken. So now we're going to wait for two more lower close, and this is going to be the upper part of our range. So this is officially our new range. And as you can see, the first setup shows up here. Once we have a qualified range, we have a candle closing below, and then a candle closing back inside. So what we do is we wait for a retest, which happens on this lower area. And this is our long position. The first target is on the other side of that range. The next setup happens as soon as there is a higher close above the range. So we close above the range, and the next setup, as I told you, is whether we buy as soon as this candle closes, and we put our stop below, or we wait for a retest. And as you can see, this candle tests right in the upper part, which is going to be basically our upper business zone. And this is the other trade. And all of these trades in this situation go to target. We managed to not get stopped out. So the first setup for continuation was here. The second setup for continuation was at the breakout. Now price keeps going up, and we have the first idea here. Two lower closes, 1 and 2. And then two upper closes here. So from this one, we closed here, and this is two lower close, lower than this one. And since the lowest close, we have 1, 2, and that's our bottom of the range. So this is the top of the range, this is the bottom of the range. The first thing that happened is a breakout. So we close a candle above, we buy, and we probably get stopped out. But as we close back in with this candle, this is another setup. This is a reversal setup. So we sell when we close back in the range to go to the other side of the range, because this is a failed auction. Okay? We go to the other side of that range. This becomes the top of the range. And we go below here, we close below, and then we close back inside. So we close below and then we close back inside. What's the setup here again? We wait for a retest of this area, which, as you can see, happened exactly here. And this is our long idea. If we tried actually to sell on this breakout, we would have been stopped out. Let's also draw the stop losses that we took. The first stop loss was this long here. And this other short position was a stop loss. And then what happens? Price breaks above, and whether we open as the candle closes or we wait for a slight pullback, this is another trade that easily goes to a 1 to 3, 1 to 4 risk to reward sort of target. And with two very simple ranges, we get one stop loss, one target, one stop loss, one target, two targets on this one. And as you can see, just by following a logical, very logical framework, we can get good trade ideas and good results just with a very simple, very simple sort of method. And I strongly suggest you to start counting, okay? So count the two lower closes, count the two upper closes, and find all the setups. Take a very trend following type of market, such as stock or a index, and start practicing with these kind of setups, okay?